G'day, Money Miners. JD, welcome back in the flesh, big fella.
Thank you very much,
I
Matthew.
missed your skin.
Happy to be here,
Ability
mate.
to touch you. Zoom and Teams will never compete. Mate. Oh, yeah. Right, boys, what have we got today? Adriatic, fully funded again.
Again.
Topped up.
We called it.
Jesus Christ, they'd be pretty good at getting fully funded now, eh?
Yes, they would be, Matty. But
Yes.
so they're topping up with US 50 million. Orion is who owns over 8%. They're selling down at least half, or about half of their position.
Yeah, right. What? And we've got a bit of Mac.
Bit of Mac
the previous
and
SPAC.
Polymetals, yeah, we've spoken about them as well. I think a while back. We're going to chat.
Action in the Cobar, mate.
Yeah.
Oh, yeah,
Oh, it's heating up.
God's country,
Well,
mate.
we thought it was heating up like 4 years ago, but now it
just
seems like
beginning,
it's
mate.
really heating
It's
up.
just beginning.
Mate, if you like rugby union and fighting, Cobar's a good place to go.
Is it?
Union,
Mate, go
not
to
league.
the bloody they love their union down that way.
Yeah, right.
Probably love league too. Go to the pub, love fighting. I can love good.
That should be the next site visit, eh? We've also got a couple comments on St Barbara who need a bit of help, and we think we can hook them up.
It was tough to narrow down which partner of ours could help them because they could pretty much all help.
All applicable.
Because when you need that much help.
And Firefinch, mate. They've a bit of arbitration going on. I've got a request to the money miner, so stay tuned for that at the end.
Beautiful trade. Right, let's lead her off with Adriatic raising US $50.
Go to
And
Bosnia.
as you said, Ryan selling down.
Yeah, mate. So should we be surprised to see Adriatic rattling the tin today? Of course, Adriatic, they're bringing onto production. They're ramping up their VRIFY silver project. It's
VRIFY.
It's a polymetallic there, so it's not just silver. But now that silver's had a run, mate, you call it
It's just silver.
You call it the silver project.
And the silver miners trade at a premium. They haven't got the name in
Yeah,
there.
no,
wait till it's Adriatic silver. The name change is imminent.
Wait for it. Yeah.
But look, I think we shouldn't be surprised, right? Because even though they have been fully funded since they put their debt funding in place with Orion in January 2022, that's this announcement, fully funded. Since then, Adriatic notably rattled the tin for US $32 in August last year during Diggers, only 2 weeks after their quarterly report reaffirmed they were fully funded to project completion. Then we flagged...
US as well.
Yeah, US, yeah. Mental. Anyway, then we flagged again an effective new US $25 million debt facility that would be in place to support the mining fleet purchase as part of a termination of the mining services contract. That was pretty recently. And now
owner-operator.
yeah, exactly. And now we've got this this new capital raising for another US $50 million or about 75 million Aussie, which it'll prevent them hopefully from having to draw down that $25 million US debt facility. But it's effectively they're adding another $25 million buffer on what our kind of previous numbers or base case would have been. So the cap raise is at $4.40 per CDI. So it's to these ASX CDI investors. That's an 11.5% discount to the 5-day VWAP. And I wrote up a fair bit about this raising in our daily newsletter this morning, gents. Moneymine.com if you haven't signed up to the director special yet. Just
In the show notes.
But look, I wrote up a bit, and I think it's worth contextualising the points that I think are important here, because we've discussed some of the ramp up kind of things going on at Adriatic over the last 6 months. Firstly, Adriatic's CFO stood down from the role 3 weeks ago. Now the money miners know what we think about sort of churn of key personnel during ramp up. I think in this case it's a pretty benign instance from what I understand, but we always raise questions when there's CFO or key personnel churn during ramp up. It's never the best look, right? Secondly, this is now US $82 million in extra equity raised since being fully funded. Thirdly, there's some signals to draw, I think, from the actions of both Queen's Road Capital and Orion lately. With Orion, as mentioned, Matty, they're selling down as much as half of their equity position in this raise. Now, note, they're keen to make sure they are below 5% shareholding in the pro forma Adriatic at a minimum, though. And they've agreed to not trim the position more than whatever the sell down in this is for 90 days.
But it's not like it's like a handshake escrow, is it?
No,
is it actual?
It's commitment, yeah.
Yeah,
but
righto.
but 90 days is such a short time frame that the read through is they'll probably start trimming after that. Otherwise, you commit to longer. But and it is a fair point that Orion have been selling a lot of positions lately. I think they're going to do a new fund or something like that. But you've seen them trim.
I was about to say they must have come into a bit of green. They sold that massive stake in Capstone Copper.
Capstone was it? Were they on the Greenstone project as well? I
believe so.
Yeah, so they're trimming a lot, right?
Yes, they were. Yes.
So with Queen's Road Capital, this is the convertible fund managed by Warren Gilman, former guest on the podcast. Also, like the fund that has a convertible with NextGen, we've seen them on as well. They had a $20 million US convertible with Adriatic that was set to mature in November this year. Now, when Adriatic tweaked its debt terms with Orion earlier this year, when they had this sort of revised kind of mine plan, they provided an assurance as part of that QRC's convertible debt would actually be converted into equity before that November. It would happen by the 31st of July. And what we saw was actually in early March, Queen's Road converted the debt into shares. And you might be wondering why I think this is a big deal. Why does it matter if they converted it in March or July? It's not that long or whatever. It's because Gilman, in his own words, on our podcast last year, said that he'd be unlikely to ever convert early. Have a listen to this.
9 times out of 10, I'll hold the converts to full maturity and beyond. So that usually means 5 years and beyond. Why? Because it's such a wonderful structure. You have total optionality on the upside of the equity that you're investing in, but you're still receiving this coupon. So if I were to exercise my right to convert prior to the maturity of the debenture, I'd be losing out on getting that coupon every year for the next 5 years. So I tend, even when we're well in the money, I tend to hold on to that just because I like receiving my 9% or my 10% on a quarterly basis. Now, I should emphasize that our structure allows us to convert at any time and convert as much or as little. So if I have a $20 million convertible, I can convert $1 million of it and sell those shares into the market if I want and keep the other 19. I can do that any day of the week through the whole 5-year period. So if the stock goes crazy for what I think is going to be a brief period of time, I do have the flexibility in the structure to realize on that. I tend not to do that though, because I'm a partner with the company. I'm their partner for at least 5 years, maybe more. And I don't want to kill any rally in the stock. So I've never done that.
But that's exactly what he's done here, right? And despite all of this, Adriatic's share price has continued to soar. Like it's
Go silver. I'll bring up the spark. I'll bring up the spark chart. But you look at just in this last month or two.
Go silver, gold, zinc, copper, but I think they've streamed that all away. Everything's gone in their favour.
Yeah, so they are. You can tell why they're raising bucks now. Very opportunistic.
Yeah, and it's actually interesting, right? Because normally if you're cutting it pretty skinny on ramp up, the market will price in that you come raise and your share price dips because you come raise because people look to opportunistically short your stock. In this case, it's run on strength in the commodity markets and you're left there so the decision for Adriatic's management is do we add a bit of financial buffer here because we've had this strength in share price, or risk having to come to the market sort of 6 months later at a much worse sort of outcome. So I find it fascinating because what the market has been telling us is that any short-term hiccups are kind of irrelevant in the big picture, and the grade is insane. We know that, but they've got some real kind of technical risks going on here, and the balance sheet's not clean. There's debt there, which complicates risk further. So that's why the equity actually makes sense. As disappointing as it is for shareholders, and as frustrated as we are as commentators when you see your bloody fully funded company come to market rattling the tin twice, it's not a good look. We don't love it. I don't disagree with the decision to rattle the tin here.
No, and I think you look at your last point, Trav. is the technical risk. Like I think, thank fuck they've got really high grade because it looks like it's freaking hard work over there with the ground conditions.
Mate, that's. I'd love to get your insight on that, right? Because the development meters was something that was mentioned in one of the announcements today. I think they said they'd done 256 meters.
But you look back at the quarterly, and they mobilised a third jumbo in April. So
on the call, they talked about the opportunity to bring in a fourth one as well.
Ugh, God. Well, if I know, sometimes you've got a rehab jumbo, just doing dedicated rehab, and it mightn't be just boring cuts, but usually your rehab jumbos where after stoping and all that sort of work, but they're not even stoping yet. It's all just they're developing the mine for the first time.
It's probably worth adding in that first concentrate was kicked back, I think, at least 3 times.
Well, they're not stoping until I think it said July this year. So it's all just development ore so far. So if you looked at, I'll compare it to what 300 metres. They're going to aim or get close to 300 metres of development for May. I think they said they got 256 in April. And with 3 jumbos, as I've mentioned. So because they said 41% of the development required was at the highest level of ground support. So nearly half the development they're taking is the most strict ground support regime, which is fuckload more bolts, fuckload more shotcrete, just more money, more time. So I'll show you what that means on a scale of easy to hard in the jumbo world. Back in the day, So Jundee's the one I always refer to.
Easy.
It's probably one of the most. It's one of the more simpler ones I've ever worked at. I'm sure there's ones very similar. So they get around 2,200 metres a month with, I'm pretty sure it's still 5 jumbos.
Okay.
So that's an average of 440 metres a month per jumbo.
Okay.
Good ground conditions, splitties and mesh, not much of it, very simple, piece. Bellevue, similar ground support standards from what I led to believe, and real good ground conditions, but really, really hard,
So
which
you can't get the
slows
same
down,
meters. Yeah.
slows down the speed to bore every single bolt hole, bore every single face hole. 4 jumbos for them gets around 220 to 310 per month per jumbo. And they're the highest paid bloody jumbo operators in the country, which usually means they have some of the best ones. So it might be a bit lower if you haven't got those guys there. So, right, we've gone from, stay with me, money miners. We've gone from 400 odd per jumbo.
Yep.
Now we're down to 220 to 300.
Yep. And it's still good.
These guys
Yeah.
are getting less than 100. So
Per
they're
jumbo
getting
per
under
month.
half of what Bellevue's getting.
And the challenges they've
Per
got,
jumbo.
it's 8 ground conditions.
Well, I think we can surmise there'll be numerous factors.
Yeah.
So obviously if the ground conditions are poor, which is what they
they've
never
talked about that.
explicitly say,
Yeah,
but they
they have. They've talked about
it's like the highest ground support regime. So which indicate the only reason you put shitloads of ground support in is if the ground's fucked.
Yeah.
So that's obviously very hectic. I know they had they've got a lot of expats going over there now. So, but you mix them with the local workforce. Not sure what the experience levels are. So that'll be a contributing factor as well.
The operators might not be like Matty Michael, is what you're saying.
Oh, yeah, that might be a good thing for the site, Travis. But I think Matty Michael needs to go back on site and drop a couple of kegs. But it's a really compounding double whammy when the ground is shit. So when you've got shitloads of ground support, the time it takes to put it in, you haven't actually achieved anything. You've just supported the ground. You have not moved forward. Mm-hmm. And so it costs a shitload of money on extra shotcrete, the extra ground support, the more expensive forms of ground support, and you bugger around and you don't really move forward. So it just looks like that's what's happening.
And it's all far worse than expected, right? And those expectations
Yeah,
are...
it wasn't flat. Like, I don't think it was, and it might be hard to unless you got, geotechnical holes and things to get a good indication of.
Yeah.
It's hard to predict what the ground's going to be like before you get in there.
Absolutely.
There's ways you can.
But to an extent, like financing is based upon it because that's when you set up your debt repayments and these sorts of things.
The contractual meterage rates weren't being met by the mining contractor, and that was part of the reason why the termination ultimately occurred there. And then to your point with the basically like, are they expectations, right? So they were asked on the call today, do they still stand behind the revised guidance that came to market in January, in which they said they do? So I found that interesting.
Yeah, right. Yeah, and the interesting thing is if this development, the ground is causing this much dramas in the development phase, it's going to make stoping very interesting. So I'm not sure if these high ground support areas are in the ore or in the capital development, unsure. But if that shit ground is in the stoping area, that just increases unplanned dilution, which lowers the grade. Thank fuck they got the grade behind them to sort of mask for that. Difficult drilling, difficult prepping of the hulls, difficulty charging, just makes life hell. So I'll be watching very keenly once they start stoping, because it's going to be very interesting. But I tell you what, DSI will be making a fortune over at this joint.
Yeah.
I would assume the highest grade polymetallic mine in the world would be using DSI ground support.
Yeah, and I think the wording would be that DSI are rightly earning a shitload because they are getting that free cash flow, which, if things hum at Adriatic, should be pretty strong cash flow.
Yeah, good. It's my golden rule in life and mining, boys, and it's not just mining. This goes life. Good ground, you don't need much DSI, but you still need them. Shit ground, holy snap and duck shit, you need DSI. Full stop. If the world just adopts that philosophy, everyone will be fine.
It's a rule to live life by.
Yeah, you heard it here first. So
If they're not using DSI, I might expect another cap raise.
Another fully funded capital raise.
love it.
And they did sell first concentrate today. Apparently the con was on spec. So anyway, there's some positive stuff in there.
Beauty. Alrighty.
St Barbs, boys. JD, yeah, good. Oh, ding, ding, ding.
No, I don't. No, not anymore.
Oh,
yeah.
Jesus Christ, Trav, you all right?
My $500 is rinsed it, mate. Anyway, if I were a St Barbara shareholder, I would still be disappointed, Matty.
Down, I'll bring up the spark chart. I love saying spark chart. Spark. It's like a dog. It's like a bloody chihuahua.
What are you seeing on the chart, Matty?
Mate, she's down. Prices are down. Yes, bloody an update. Oh, anyway, anytime you see update,
Out of the blue.
shit house.
Yeah.
You know it's going to be shit. Generally, pretty much 99% of the time, every time.
Yeah, you've hit the nail on the head here.
FY24 guidance being hit at Simberi. Talk about a fucking company that needs the Brooks Group right now. Let's just work through the announcement. Difficulties faced with air transport services. St Barbara, I introduce you to Brooks Airways. Total material movement has been impacted by excavator availability. Well, St Barbara, if you're listening, I hope you're not listening. I hope you're working to fix all this. But if someone can forward on to them, Brooks Equipment Sales and their new partnership with XCMG, you want an excavator, St Barbs, ring Stewie Brooks. He'll get you 1, 2, 7 of the bastards. Mate, those excavators are ready to bloody dig the shit out of PNG. So,
Matty, you've taken the words out of my mouth. Just reading that one pager today, every paragraph was screaming at me, Brooks. Brooks, Brooks, Brooks.
Brooks,
They'll sort you out.
JD, what's actually bloody happened over there?
So it's an update at Simberi, their asset in PNG, obviously, and we've sort of highlighted all the difficulties that they've had there, Matty. So equipment components, diesel fuel, air transport services. A lot of it actually comes down to inadequate availability of foreign currency, in their words. So obviously it's fluctuating around quite a bit, the currency over there, and that's leading to some difficulties for the company. The outcome is that Simberi, which was expected to do 20,000 ounces this quarter, it's not going to get there because they haven't been able to get to the higher grade zone, the Sorowa ore zone, and that means they're stuck in lower, sort of 1 gram per tonne dirt. Ultimately means they're going to do about 14,000 tonnes here instead of the 20s. So
Ounce of 14,000 ounces.
Ounces, rather. Yep. So full year guidance has been chalked off in total by 11,000 ounces, using the midpoints from 65,000 down to 54,000. All-in sustaining cost, get this, going up from a midpoint of 3,300 Aussie to 3,800. Ouch. So, like you said, Matty, the stock is off. It's off 17%. And if you zoom out to the last quarter, they've actually had a real recovery. And obviously a lot of that coincided with the rise in gold price. Operational talk, not financial talk. They don't have financial leverage. They've got a shitload of cash, $190 million market cap today, $218 million in cash, although roughly 50 you can chalk off for this restricted bond over everything that's gone on at Atlantic up in Canada. Or if we just ignore that bond for a moment, EV of 40 million. And I mean, it still looks kind of expensive because you've got two assets that they just cannot get right. The shareholders are screaming out for consistency in performance, right? They've got such a big pile of cash. They can fund things. They came out with the new plan at Simberi not too long ago.
That looked like, I couldn't assess the technical parts of that, but I was looking at the production, like the proposed production, and it needs a lot of CapEx, and the CapEx number was flimsy, so it'll be higher than that. But I was like, yeah, I was intrigued by that plan. I'd love to see more of it, but this is just shows you how like maybe dubious those plans are.
What do you call talk when you've got talk to the gold price when it goes up, you lose less money? Like it's not like you haven't got talk to make more money. You just talk to lose less.
Maybe negative operational talk. It's just I mean, we had new management and
Negative
stuff.
operational talk.
We had new management and whatnot come in, but this clearly doesn't give any shareholders confidence that it's the right sort of team. And, it probably sounds a bit hard-hitting because they haven't been there all that long. But you're not filled with confidence after seeing stuff like this. And I get a lot of it is probably out of their hands right now. Probably judge them over a bit of a longer-term time horizon. But I know they've got a big pile of cash. We'll see how they deploy that, whether they do, like you say, Trevor, and actually put it towards the CapEx that's needed at Simberi. But something's got to change there because things aren't going well.
If there is one company on the ASX right now that needs to change its bloody name, it's this one. It will be tainted with the name St Barbara and the history of it forever. There is not...
What do you reckon, Hoover House?
Oh, Jesus Christ.
Well, it wasn't always that way.
What would you... PNG Gold Mines NL or something.
What was the spin out? It was Hoover House and Phoenician. Yeah, change the name to Phoenician. That'll be fun.
Oh, mate, it's just the history. Like, it's just such a bad taste when you hear the word St Barbara.
Yeah.
I could say it's so much worse, but
yeah,
I'm proud of myself for not.
Okay, you got to go, mate.
Yeah, I've got to go to the quack again. But,
Mate, we'll bring it on home. There's another...
Hopefully they don't take me blood pressure because it's freaking high after talking about St Barbara. So, you're right to finish it off, boys?
Mate, we'll sub you out.
I got my ads done.
Yeah.
Bloody, yeah.
See you, mate.
All the best, mate.
Hootaroo, money miners.
All right, Trav, let's bring it home, mate. We've got a couple more to talk about. I reckon let's start with Metals Acquisition Corp and their deal with Polymetals, an alliance as they call it. So
this is interesting, mate. Mac. Everyone's been talking about what's Mac going to do in the Cobar.
Yeah,
and, we've got an agreement to talk about with Polymetals and maybe an unsuspecting party.
I mean, how many references to M&A, to takeovers and whatnot did we see in the listing documents and the prospectus when Mac listed here? It's clearly a part of the strategy, and this is it's a smaller deal, but we'll get into it. A bit about Polymetals to start. I know we've spoken about them a while ago, but probably worth brushing people up. They hold the rights to the Endeavour silver zinc mine about 40 kilometres north of Cobar. So we'll chuck up a map. It's got a 38-year mine history, placed on care and maintenance in 2020. So
used to be owned by Toho, if I remember correctly.
Yeah, exactly. So they picked it up in March 23 from CBH Resources, which is a subsidiary of Toho Zinc.
And when they picked it up, there was basically an environmental provision that they said they would solve in like 12 months' time or whatever.
Exactly.
They recently renegotiated that. So
yeah, that had some words written to that effect in the announcement today. But you're right, the environmental bond replacement was sort of contingent part of all that. They came out on May 14th, so a couple of weeks ago now, and revised the arrangements around the purchase. Obviously, the rehab bond being a key part of that. It gave Polymetals an additional 2 years to replace the $28 million rehab bond, and $28 million for a company like this is a significant amount. And they can actually defer that. They meet some conditions a further 2 years subject to shareholder approval. So with how things stand currently, mate, they are going to start mine refurbishment works in the second half of this calendar year and targeting first concentrate in the first half of next year. Obviously, a good chunk of infrastructure in place, as you'd imagine, the decline hoisting system, 1.2 million tonne per annum processing plant, and then all the rest of it, given it was an operating Ryan. You've got grid power, water, railways.
That's the thing about the Cobar region, right? It's super long infrastructure. There's like a lot of latent infrastructure that is underutilized in the region. And that's why we talk about cobar consolidation all the time, because it feels logically like there should be some consolidation to bring online some of that latent infrastructure. Right?
Yeah, and you sort of look at the puzzle pieces. You're like, what fits in where, And here's a great example, because CSA, mine, MAC, they've been hitting zinc. Now, part of this agreement is that the deal secures for MAC processing optionality for zinc ore at Polymetals. So, for reference, you can see on the map there that the CSA mine is 11 kilometres northwest of Cobar. So you can see them very close together, and it makes the trucking not all that far. So
what's the deal, mate? What have we what's the news between the two companies today?
Let's get into it. So a two-tranche deal. Tranche one is for MAC to invest $2.5 million at 35 cents, which is a premium to the last close. They closed at 28 cents on Friday, so it's not a bad little premium for a deal to come in at Polymetals, and as you'd expect, the share price has ticked up 20% to in and around that level. Now, that'll get them a roughly 4.3% interest in the company.
Yep.
And then you've got tranche two, so that would be for MAC to invest an additional 2.5 million, so 5 million in total at the same 35-cent share price, assuming a bunch of conditions are met, which we'll run through now. So
those conditions, so what? Polymetals to treat the high-grade zinc that Mac's found under a tolling agreement?
Yeah, exactly. And so one of those was for Polymetals to secure sufficient funding to restart the Endeavour mine. Obviously, Metals Acquisition Corp don't want to be the ones to fund all of that, because they've got a bit of a hefty debt profile of their own since buying CSA off Glencore.
And is the thing they're really after even the zinc at Polymetals, or is it the next point you're going to talk about?
This is a big one. So 4.5-year water offtake agreement, which will allow Metals Acquisition Corp to draw up to 150 megalitres of water annually. And they've got optionality for another 4.5 years on that if they get FIRB approval. So
that water will go from the Endeavour mine pipeline, and it's excess water to Polymetals needs to some extent, and that'll enable MAC to enhance their processing capacity of the copper that they're producing at the moment. Is that a fair assessment? Right.
I think from the digging we've done, it's fair to say that is one of the bigger points. Metals Acquisition Corp really wanted that, and you can sort of see that could go up to 9 years. That could be a real check and a great positive for Metals Acquisition Corp. And the final condition is that they need to get third-party consent. So obviously they've got Glencore and other lenders on their sort of balance sheet there, so they just need to check that off with them.
It looks like a pretty sensible, deal
does.
when you look at all that. Both parties are getting something that they need. Like if you're Polymetals, you're basically trying to build a feasible pathway to getting back into production, and funding's a big limitation for them. Here they get some partial funding support from MAC, and also the economics of the project might improve by incorporating their high grade zinc into the project too. And then on the other side of it, it's, looks like MAC are constrained by water, and this sort of solves that. And I think a lot of the commentary around this agreement might be in relation to the M&A activity in the region, right? Because you're trying to figure out who is MAC going to buy next, or who are they going to buy first ultimately, because there's all this M&A hype about them. We've seen discussion, I think, in the Australian a lot, kind of linking them to potentially have interest in, I think it was Mount Isa Mines was the last one I read. I think there's been talk about Aurelia in the past. Aurelia is a popular one on the Twitter sphere. We've had Rusty in here in the past talk up the prospects of Peel, which he's a shareholder of, obviously, so naturally we talk about that. And look, there's other players in that region who've had some interesting progress of late. You've got sort of Kingston and then Mineral Hill. Sort of stuff going on. There's a bunch of players there. It's long infrastructure. And you look at this agreement today and you pose the question, is this agreement like preface a deal? And I look at it and I sort of think, I don't know. It sounds like I look at this deal and I'd probably interpret Mac's motivation more to do with the water and, Endeavour's motivation maybe, more to do with the other parts that we talk about where they win. But I wouldn't say that this is what you see before a deal. I'd say this is like,
this is the deal.
This is the deal.
Yeah. I think you're dead right. You look at both of the companies and what they actually want and what would they achieve by going one step further and doing a full sort of takeout. And I think in particular from the perspective of Metals Acquisition Corp, they're getting what they want from this deal. They don't need to go that step further. I just don't think it's very much in their interest. I don't think that's the deal. And all those sort of rumours stem from the fact that it's been no secret that they are, long M&A. They want to do deals. They want to build a multi-mine company, but I don't see Polymetals being the company that they take out. But this is a deal that benefits both of them. The phrase that Matty loves is a win-win, and I think this is very much one of those ones.
JD, I want to talk about Firefinch, right? So they put out this one-page announcement today, and effectively Firefinch, they've received a notice of arbitration from EGTF in relation to Marilla SA's purported failure to pay amounts in relation to the mining services agreement. And look, EGTF are claiming an amount of Aussie equivalent to Aussie 32 million bucks. I'll read word for word the funny parts of this one-page announcement. Firefinch considers that EGTF's claim against Firefinch is entirely without merit. Among other things, and of particular relevance, Firefinch is not party to the mining services contract, nor is otherwise bound by the arbitration provisions it contains, and there is no agreement between Firefinch and Marilla SA that would require Firefinch to meet Marilla SA's debts or other liabilities. Firefinch intends to vigorously defend itself against the claims made by EGTF pursuant to the arbitration notice with the assistance of international arbitration specialists, and will seek to recover from EGTF any and all costs incurred in the context of these proceedings. Sounds like a sensible way for Firefinch to spend their money, mate. We've talked about what has happened at Firefinch in the past. If you're unfamiliar with that episode and you want to watch it, just look up. I think it's titled "What the WTF Happened to Firefinch." Paddy, our intern at the time, gave a spectacular on the saga. I read this announcement today, and I contextualise it with how the Leo Lithium dilemma unfolded, and I'm pissed off. And before I go there with a big spray, I want to put this message into the ether to see what comes back. If you have any information or evidence of Firefinch's failures to comply with their obligations, send them to me. Travis@moneyofmine.com. I will never reveal where I got the info from, but if there's a smoking gun here that can let the real truth come out, I'm all ears, and I will fucking tell that story.
Well said, mate. There was, a lot of colour that we went into in that retelling of the saga with Paddy, and a lot of behaviour that we don't want to see and we don't want to have to talk about, but keen to actually chat about this one.
Keen to shine a light if there's some absolute fuckwits that the world needs to know are fuckwits.
On that note, why don't we wrap it up, mate? 4 cracking stories. We've got a couple partners to thank, mate.
Mate, we do. We got VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Waterboards, Brooks Airways, K-Drill, New Spark, Hoodaroo Money Miners,
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.